Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by FinLearn Academy. So in this week, we have seen a very mild momentum. Nifty on week basis, it was up by just 0.5 percentage. But the great thing is that during this particular week, we have seen the breach of very important level. Uh, some days back, there was a very strong candle, selling candle that we have seen 19,780. We have seen the breakout over there. We have retraced back, but it has setting the positive tone right now. I will rather say that it is in a sideways to positive bias we are right now in, because much of the time from past I think 2 weeks Nifty has spent on the high side 90,800 as in a resistance, and on the lower side Nifty has spent acted as a support level at a 90,500. So basically this 300 point range that we have been witnessing, majority of the time spent in this particular range, exceptional days that has formed, but they have back to the range once again. So this is what a broader range. We are at a middle point right now. But if I look at a line chart, here we have formed a very tiny inverted head and shoulder pattern whose implication is a bullish, and our prior trend is also in quite a bullish. This bearish reversal means inverted head and shoulder pattern has formed at a weekly support band as well. So let's say here if I see weekly chart, so last time whatever the previous bottoms were there, here, over there we have formed the hammer pattern, and on the daily chart we are seeing that there is a inverted head and shoulder pattern has formed. So there can be a retracement. Right now we are at a 19,750 level. So it can test the neckline as well, which is a very normal course we can see, 19, which is at 19,650 level. But this particular pattern's bullish implication will remains as far as it is above the right hand shoulders low point, so which is a 19,500 level. So view remains in 19,500, above 19,500 as a positive. Little bit retracement can be impossible, but can be looked as a buy opportunity. And once we see that, okay, again the prices are starting to pick up its momentum and moving above the 19,800 level, which is what an immediate hurdle point that we are witnessing, then the next best upside potential can be the prior peak, which is at around the 20,000 level, and followed by further highs, that is a 20,200 level. So in a nutshell, sideways to positive view. Mild retracement up to 19,650 can be possible. Overall positive view will remain intact as far as we are above the 19,500. So 19,500 is a one way, it is in stop loss. Moving above the 19,800 level will be the positive development up to the 20,000 and 20,200 level. Now during this particular entire price momentum, there are a certain kind of traction that we have seen. So in this particular week, crude oil, silver, gold, so kind of the commodities has picked up momentum very well. 5% and 4-5% around they have moved up from stocks, sector specific, realty stocks, auto stocks, CPC stocks continue to do well. Whereas if I see that where the selling pressure that we have witnessed, so yes, PSU banks we have seen a good amount of selling pressure. IT stocks we have seen the 1.65, already 3 results has come down. In earlier cases, IT sector used to react very heavily when the some quarterly results were announced, but at that time, at this time, the intensity is far less. Bank Nifty is not picking up that particular mojo. It is not that much strong and not a weak as well, because it is standing at the support level. But this week we have seen that mid cap and small cap has moved up by 0.15 percentage, 0.4 percentage, whereas large cap stocks has moved up by 0.5 percentage. So somewhere, somewhat, it is hinting that a little bit value migration is happening. The large cap stocks are finding some sorts of more traction as compared to the small cap and mid caps. But as of now, no negative structure that has been observed in mid cap and small cap as well. But one anomaly that we have seen right now is that earlier mid cap and small cap was used to outperform quite a lot, but now from couple of weeks we have seen that some sort of traction from the large cap is happening. Here in the next episode, I wanted to talk about key from the stock specific where there are good momentums are happening. So we have seen that the auto sectors are into the limelight. So 3% it has moved up. So from the auto sectors, I wanted to bring one stock which has been into the very strong and structural positive momentum that has happened. So that is a Bosch. So what the specialty in the Bosch is that his stock has breached the breakout. So let's say from 2015, the inception point of this particular falling trend line, and it got breached in a year 2023. So almost 7 to 8 year time span it has consumed, and then the breakout has happened. Then you have seen the inverted head and shoulder pattern in this particular direction as well. So this is what your one shoulder, then this is what your head, and this is what your another shoulder, and here the breakout happened. The duration of this pattern is 2019 to 2023 again, so almost 3 years kind of consolidation, 3 to 4 years kind of consolidation patch, sorry, inverted head and pattern, shoulder pattern has formed, and it is in the breakout, and new breakout is happening right now. So structurally, this is a very strong momentum that we have seen in this particular week. It is up by 8%, and within a follow-up breakout as well. So we find that this is a structural change in the stock is happening. Any kind of the corrections that happens in between, so it can be used as an buy opportunity in this. From the broader perspective, the upside potential that we see in this one is the previous peak, which is around 20,000, 22,400 level, followed by 25,000, 27,000 levels of course, and on the lower side, this remains our stop loss 18,200. But this is something the positional perspective where the holding period can be more than the months to the quarters as well. But it is a very important structural, and these stocks can appeal to investors or positional traders. Secondly, during the week, we have created a one particular note on the Nifty IT sector. Nifty IT sector has retraced in this particular week, but if we are looking at it in broader structure, so we find a couple of interesting data points that sets in. So the very first thing that we have observed from the price-wise correction. So since 2004 till date, so almost more than a 2 decades history, there are 7 corrections has happened. Out of seven, 6 corrections were in the range of 30 to 35%. So let's say 32% fall, 32% fall, 35%, almost 29%, 35%, and this recent fall is about a 33% kind of thing. This is the exceptional fall, 65%. But it shows that time-wise correction happened as per the previous falls that we have seen. Secondly, from the time-wise, if we see, IT index has moved a kind of in an equivalent way, more or less like a 2 years fall, 2 years rise, 2 years fall, then 2 years rise. So 8 quarters plus minus 1 quarter that we can do, but this is what the 2 years almost cycle that we have seen. So recent fall, recent so far the 7 quarters has happened. The bottom that we have seen is on the 6 quarter. So somewhere, somewhat we sense that this is what time-wise also the prices are in the bottoming structure. So from a positional perspective, any kind of declining bottom happens in the IT sectors, though that brings in a good opportunity in this. Third data point was from the seasonality perspective. So in the seasonality, we have seen that out of the 22 years data, the ideation was that key in which month it normally do well. So we found that December month is the best month for the IT sectors, and April month is the some of the weakest month for the IT sector. So right now we are into October. There is no that much kind of the decisive action that we are seeing. But November is a good month, 67% with a gain of 2.9%, and the December month is a best month where 71% months are positive with a gain of 3.5%. So there is a very structural good move that we are seeing. From the technical perspective, if I am seeing this is a monthly chart, so taking out the peak from the 2008 till now, the slope of the moving average has worked quite well. So this is an application of the rule reversal as well. So earlier resistance level has acted as a support level. Prices has come down, formed the base. So how long this period of base was formed? So here the recent declining momentum, it has formed the 80 weeks consolidation patch, and the breakout has happened. Technical way, we can call it as a double bottom pattern breakout as well. So breakout has happened, prices are coming down. So it is very much a normal course. After the decent upside momentum, there can be some sorts of retracement up to its in previous resistance level. So as of now, we are at the support 1. The support 2 is a little bit 3% away from the current level. So there is support 2. So this video range, I consider it is a buy opportunity. The recent bottom as my stop loss, which is 8% away from my recent current market price. And on the high side, the very first potential resistance that I see is a 15% high, so that is previous peak, and about to that, that is a 22% kind of fall. So to play out the Nifty IT, I will say that Nifty ITBEES will be the good momentum that we can see, and we can have the accumulation approach with the said levels as a stop loss and targets. So this is for the week where we have discussed about the market view, the sector specific momentum, stock specific momentum, and one bonus thing like that key from the IT sector from the multiple angle, like a time-wise correction, price-wise correction, seasonality, high time frame structures, and a low time frame trading ideas. So 5 factors that we have covered into it to just to understand that okay, how the IT sector is behaving right now. So this is for the week. Whatever the discussions that we did, that is for exclusively educational purpose. See you into our next video. Thank you so much once again.